Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today we will take a look at the Canadian dollar as we have discussed recently. So the setup that we see right now on the Canadian dollar, especially on the long-term charts, are very perspective and has the really huge potential. Also, it's very interesting from the geopolitical point of view because, as you know, the Canadian dollar has the strong relation as the major exporter of the crude oil to the United States. It has really significant relation with the crude oil prices. But the crude oil by itself, it's not just the fuel for a global economy, and it's not just the commodity for different economical and production issues, but this is also the geopolitical tool. When you manipulate with the geopolitical tools with the price on the major commodities, you could breach some geopolitical targets, geopolitical aims, and we think that currently the price on the crude oil is artificially decreased by the falling to some geopolitical targets of different countries. And if you would like to learn to know a bit more on this subject, you could read our weekly research. But I will give you the hint that, shortly speaking, we currently expect that very soon in the geopolicy could come really big shifts. Maybe this would be a new spiral of tensions on the Middle East. Maybe some other issues will appear. But we see some common things with the period of time in the 2003, right at the eve of the United States invasion in Iraq. So at that moment, crude oil also had dropped for 60% from the recent top, and within some short period, the war in Iraq has started. Right now, the crude oil also stands at very low levels, but this is not the bottom yet. We think that market should reach the area around $18 per barrel, and after that, some big shift, some big event in the geopolicy should happen. So that's our view on the current market. You could ask and what relation it has to the Canadian dollar. Mostly to the explanation of the high target on the Canadian dollar chart that we have on the monthly chart. We think the Canadian could climb significantly higher. So in the short-term chart, in the long-term chart, and we explain this why we think so by the relation with the crude oil and based on the situation that we have right now on the CFTC report. So if you would like to know the details, you could read the weekly research. In the short-term perspective, we have prepared the two-step trading plan that we will follow within the nearest weeks. And on the daily chart, we mostly have discussed on Friday. So the first step of our trading plan suggests minor retracement right back up inside the body of this recent swing down. So if we'll take a look at the weekly chart, you will see that this is very large bearish engulfing pattern. And when such sort of patterns forms, usually the next step on market is the minor retracement up inside of this drop, inside of the pattern. On the daily chart, this upward action could take the shape of the bread butter by John Napoli pattern. Because right now, market stands the confidence support, it's 41.45, 41.50 area. Daily oversold. It has nice thrust up. You could take this thrust, either this most recent thrust or that thrust. This is really not not change the situation, because as based on this thrust, as based on that thrust, market shows too close below the 3x3 and has hit the major fib support. But in the case of this most recent thrust, this is fib support at the 618, and the long-term thrust, this is the 3.8 fib support and in confidence. But anyway, market stands at the strong fib support area. And this is preliminary work for starting of the bread butter buying pattern. So the target of this brand body will be the 618 retracement of the whole move down. So this is not really small potential. It's approximately 200 pips to the upside, even more. That's why this trade is attractive. Right now we will be watching for possible taking the long position with this minor bounce to the upside. So at the same time, guys, on the hourly chart, the setup that we have prepared has taken some shifts, changes. So if you remember, we said that probably market should drop to the 1618 extension target. When we have started the discussion, market was somewhere in this area. And as you can see, we were right. This market really dropped to the 1618 target, has completed this butterfly, but take a look. It's a bit overcome this area. So it has dropped slightly lower. So it has not reversed up right from the completion point of the butterfly. And right now stands slightly lower than 1618 extension. Well, maybe this is just small fluctuations around strong support area. So market right now has completed this chart. It hasn't moved too far from this target. And in fact, we could say that market stands on the daily chart not just in confidence, but also in an agreement. Because here we have also the 1618 extension, this target of this ABCD pattern. But at the same time, guys, the fact that market hasn't turned up when the butterfly has been completed, well, it's a bit a moment that's become overall situation is a bit tricky, and it forces us to search and to monitor for another pattern to be formed for taking long. Maybe in the current circumstances, as market hasn't followed the theoretical way of action, how the reversal should take place, in the current situation, maybe it will make sense to wait when the market will start move up, and up to that already we'll take the position some retracement to choose the safer way to enter, because as you can see, the drop was really fast, and if no reversal will happen, we will not get any entry point. We just save our money, and probably the applying of the Jordan-Napoli Minesweeper A or even Minesweeper B technique will be much safer. That's why currently, guys, despite the moment that our patterns have been completed here, we can't call you for taking long position immediately. So we mostly call you to wait a bit more and to see what will happen. And don't be upset that these patterns haven't given us the signal for entry. Because if you'll take a look at the 4-hour time frame chart, we see that on the 4-hour time frame chart we have excellent thrust down. And maybe on the next week we will get some pattern here based on this thrust down. For example, we could get the double ripple buy that will trigger the upward action on the upward retracement, and that would trigger action with the daily brand by the buy. The target of this pattern will be 144.70 area, 618 resistance of the whole thrust down. This is the BNB target. That will be the first step. And second step in our weekly setup will be attempt for taking the short position as soon as the brand body will be completed, based on the weekly engulfing. So based on the weekly engulfing, we expect something of A, B, C, top, some D pattern, some deeper reaction based on the engulfing pattern. That will be our second step in our trading plan, but probably it will happen maybe on the end of the next week, maybe even later. We will see. But right now, Canadian dollar is forming very interesting setup as on the monthly chart, based on the fundamental geopolitical sentiment analysis, as on the short-term charts, because here we have some multiple patterns that could be traded. They are really clear. The volatility makes it a bit difficult for trading. So you can see the market shows really significant reaction on the crude oil, but still the patterns themselves are relatively clear, and I think that's very perspective. It's worth our attention to monitor the Canadian dollar right now, and probably we will make not just single trade here in the coming weeks.